Hello, traders. It is Thursday, June 4th, and we're 2.5 hours. Make that 3 hours into trading right now. We've got the market a little bit soft today. You can see this gap down open that we had. We had a nice little rally to start the day. Market was not able to get through the prior day's high, hit resistance, stalled, and then we got a nice little pullback. A very long compression in here. This tells me that there are buyers. So they were supporting the market, supporting the market. We just had a pretty big dip right in here. But this is typically the type of move that flushes out buyers at the low of the day. So they have their stops below the low of the day. They sell it. Those stops are triggered. Everybody's got to sell their longs. As they sell, you can see the long red candle. Chances are we'll probably pop right back up and then continue to rally. I think we're going to close somewhere inside of yesterday's range, so that will be an inside day. You can see the support level here at the low of the day yesterday. If this fails, then there's a chance that we start filling in the gap from yesterday, but I think it's going to hold. You can also see that the high from yesterday is also intact. So I think today is an inside day with some relatively quiet trading, kind of sideways action. Let's take a look at that daily chart, see what we've got there. You can see how the market's been able to get above this major horizontal resistance level at SPY 295. I consider this to be the key support level. And I say that because it was horizontal resistance. Now it's horizontal support. It's also where the 100-day moving average comes into play. And it's also where this upward sloping trend line come into play. And if we're down to 295, the 200-day moving average will have already been breached. So as long as we're above SPY 295, you continue to sell out of the money bullish put spreads. Expect that the market is probably going to move sideways over the course of the next month, month and a half while we get clarity. We need to see if this economic recovery on a domestic and on a global basis starts to gain traction. Almost every state is reopened for business now. And the early signs from states that have been open is that the coronavirus is not spreading as had been feared initially. Also, we're getting some decent economic indicators. ISM services and ISM manufacturing both came in better than expected. I view those as forward looking reports because they are surveys. Almost every other type of economic release is backwards looking. It's historical data. We know it's going to be ugly. So I thought those are two good data points this week. We also had ADP, which I hold in much higher regard than I do the unemployment report. ADP came out yesterday and said that there were 2.76 million job losses in the private sector during the month of May. That was much better than the 11.5 million that were expected. The reason I like ADP is because they process payrolls for small and medium-sized businesses. They know exactly how many direct deposits they made. So it's easy for them to calculate that number. As soon as the government gets involved with the agencies and holidays and adjustments, everything gets thrown out of whack. And quite honestly, I don't trust their number. ADP, I really trust. And I thought that was a pretty good number. We also got some encouraging news from China this week. Their PMIs, their service PMI and their manufacturing PMIs were both above 50. That's a good sign. China reopened in April, so it is the litmus test for the rest of the world. The initial stages of the recovery should have some pent-up demand. Consumers hopefully will gain confidence that they're going to be employed, and so they will start to spend money, and that will get the whole economy back on track. Now, if everybody goes back to work and they're looking over the shoulder and the orders aren't coming in and they're worried about job security once the stimulus checks run out, then they are going to save. And that would be a problem because it would take a lot longer for this economy to recover. So we won't have that clarity for another month, possibly month and a half, maybe 2 months. But I think in a month we'll probably start seeing how this is all going to play out. Until then, we have to be conservative. We cannot swing for the fence. The easy money right in here has been made. And now we're kind of flatlining. We had a nice little breakout here. Yes, we were able to get on that for a little bit, but I think the resistance is going to build right now at this price point. So let's put that 5-minute chart up and then let's find some stocks. You can see that big drop that we had. Remember, watch this thing tick higher and higher. We have a bullish cross on the 10P indicator. I think we're going to start to see a little bit of a rally. We've got to get at least through that halfway point on the red candle, spend some time here. Then we should be able to get back above that opening on the red candle and rally from there. So we've seen the dogs barking. I had mentioned this yesterday. All of the laggards, the airlines, the hotels, the casinos, the cruise ships, restaurants, all of those stocks are rallying like mad. Now, when that happens, that usually signals the last leg of the rally because you see a rotation into all of those laggards. So, Boeing is another one. All the real estate investment trusts like Simon Property Group, the largest mall operator in the country, it's rallying, even with the riots, even with the stores still being closed. So you have to be very, very, very careful when you're trading those stocks. I am not going to include those in my daily picks for a day trade or a swing trade because I think that they're so volatile that those conditions can change very, very rapidly. So let me show you a trade that I did today. I want to really emphasize how relative strength works and how these searches work. I clicked on Costco. You can see how the stock gapped up above the prior day's high. Very, very nice. Got a little ahead of itself, pulled back pretty hard, but right in here, you could see these long tails under body. The stock was able to hold the gap and it was finding support. Now I'm going to back up a little bit here so that we can compare apples to apples. And we're only going to look at this last piece of the price data. And then I'm going to do exactly the same thing for the SPY. And this is the screen configuration that I show and that I use every day. I pop up a separate chart. So you click chart. You dedicate one chart just to the SPY on a 5-minute basis, and then I tuck it right behind my primary screen for Option Stalker. And what that allows me to do is I can come in and watch exactly what's happening. So here, this dotted line lines up with this dotted line right here. Market down, 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 stock up, up, up. So that tells me that buyers are lined up. They want in. If they wanted to pound the stock and fill the gap, with this market decline right in here, you would have seen boom, 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 down, gap filled. Didn't happen. They were anxious. They wanted in right here. And they were buy, 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 buy. Anything you got, I'll buy it. So all I needed was the market to just flatline, to hold this support level. We had a couple of tails under body. That was the low of the day. We had the 1OP indicator tanking like mad. All of those things suggested that we would see a bounce in here somewhere. All I needed was for the market to flatline. So let's see what the market did. Market flatline. See? Just went sideways. Let's take a look at what the stock did. Oh, yeah. That's the sweet spot. That's exactly what we're looking for. I made $1.40 on that Costco trade. I've been trading both sides of the market today. We had that 1OP indicator cross up here, right in there. We're near the prior day's high. This told us that we needed to be very cautious with longs, even consider some shorts once we break down through that compression low right in there. Once we had that breakdown right in there on that red candle, I could get short. I shorted DOCU and I shorted ROKU, both for $1 gain. That's how we do it. So even though the market's not doing anything, we've got an inside day. There are lots of stocks with relative strength and lots of stocks with relative weakness, and we use the 1OP indicator and the S&P 500. We don't trade the S&P 500, we trade stocks and use those stocks as a surrogate market position, looking for relative weakness when we want to short the market, looking for relative strength when we want to go long the market. I've just described to you our trading edge, and it's an edge that you see in every one of these videos every single day. So I think you still need to favor the long side because we've had upward momentum. Know that that upward momentum is coming on very, very light volume, so I categorize that as a seller's boycott. That is not a real strong rally. The fact that we're seeing a lot of rotation into the laggards also has me a little concerned because that tells me we're at the tail end of the rally. But right now, as long as we're above SPY 295, we still need to focus on the long side. We need to focus on selling out of the money bullish put spreads. So Let's take a look and see what we can find. I'm going to go all the way to the end of the chart here so we can see what's happening. Seeing a little bit of softness down in here still. So we'll see if this holds. That low from the prior day is kind of what I'm looking at for support. I believe we could find support in here as well. Very choppy price action. A big long compression like this early in the day tells me there's not a whole lot that's going to be going on. Big market rally yesterday, probably a day of rest today. So let's go in and take a look at some of these other stocks. I'm going to go into relative strength 30. So on a market pullback here in the last 30 minutes, these are all the stocks that are leading the charge. They all have relative strength. I tend not to like stocks that are down on the day. I want to see stocks that are up. ABBV, yeah, that's what I'm talking about right there. Look at the stock rallying up today. Look at it go right now while the market is selling off. Let's put up that daily chart. Hopefully, we don't have a lot to go on the daily chart because it's still in a compression. It's right in this range. Ideally, the stock would have been poking through this horizontal resistance up there. If it had been, then I'd have a really nice long position that I could take. With the market pulling back right now, I'm not as excited about it, but I will watch that stock. ESTC, that's down for the day also. GOLD, starting to find a little bit of support. Let's go into heavy buying, see if we can find something there. BA has been really strong today. You can see how it's through this horizontal resistance right in here. Let's put up that 5-minute chart. It's still able to hold the gap. It's backing off with the market, so I'm not too excited about that. Actually, I'm going to go into bull run. This is going to show me stocks that are continuing to move higher. That's a gold stock right there. You can see the relative strength. Another stock with relative strength. So gold's doing very well today. IBM is down, so I don't want to check that. I'm going to keep going down until I find something that I like. Right now, Costco has shown me about the best relative strength for the day. GILD actually looks pretty good. Look at that stock run higher. Now it's testing the high of the day. Let's go into that daily chart, see what it's got. Bouncing off the 100-day moving average. Gilead starting to find some strength in here. Possible bullish put spread here. You'd want to sell below the 100-day moving average. You'd also want to sell below these lows right here, which is 72.30. So I would look to see if there's anything in a $72, $71 bullish put spread expiring very soon. So we can go in, we could take a look at these, and let me pull that up. GILD, gonna go in, and I'm going to take a look at the June 12 expiration, and we're going to go down to that $72 strike price and see if there's anything there for us. And so 1 week out, sell the 72s, buy the 71s. You can see that that's currently 15 cents bid offered at 20 cents, so it's very close to what I would consider to be a decent risk-reward ratio. If I can get 20 cents for this with $1 between the strike prices, I have to put up 80 cents to make 20 cents. That's a 25% return in the course of a week, and I have that 100-day moving average that I can be leaning on. Yesterday I highlighted Qualcomm. It's actually been a really nice one. I like it again today. You can see how the stock is continuing to move higher. We had this congestion right here, this price compression right around the major moving averages. We've got a horizontal breakout through resistance with the stock closing on its high and good volume. We have follow through today. I still like Qualcomm. Still like it. So you can see the stock was able to get above the prior day's high. That's another good sign. So I think Qualcomm still makes sense on a day trading basis, and I think it makes sense on a swing trading basis. I also like GILD, but that's a choppy stock, so I'm not gangbuster on GILD, but I think it does set up for a decent little bullish put spread. I think that it's starting to show some really nice relative strength today. I also showed you Costco. I like that, but you can see that Costco doesn't really have that technical breakout that we're looking for, and lots of noise, chop back and forth. So Micron was another one that came up on my searches today. I like this breakout through horizontal resistance. I like it above the 100-day and 200-day moving average right in there. You can see those come into play right around the 48.50 level. So if you can sell a bullish put spread using that $48 strike price, I think that makes sense on the notion that this breakout right here is going to hold on a horizontal basis, and that those major moving averages are going to hold as well. Decent little volume coming in. So, quick recap. What do I like? I like Micron. I think Costco does pretty well. I like GILD. I like QCOM. All of these stocks look really decent from a day trading standpoint. Got to watch the market right now. It's trying to drift lower. I think it's going to find support at yesterday's low. It may even bounce before then, now that longs were shaken out on that long red candle right there. That was triggering stops, so they're out. We'll see. If we just sit here for a little bit longer, we should start to see that bounce, and that'll give us an opportunity to get long. Overall, the market should stay within this range today. So don't look for a lot of price movement after yesterday's run up. This is a time to be careful overall. I'm reducing my risk on my day trades. I'm trading half size in the morning. I'm trading quarter size in the afternoon. Very, very little risk exposure. I'm trimming back all my swing trades. I feel that this is a low probability trading environment with the market floating higher on light volume. Anything that comes into play one nasty day could take away what we've built for the last 2 weeks. I am waiting for that type of a dip so that I can get a little more aggressive, so that I can monitor the bid, so that I can be reassured that there are buyers at lower levels. And then once I get that dip, then I can get a little bit more aggressive with my longs. I can get a little more aggressive selling out of the money bullish put spreads. But right here, right now, I got to tell you, I am very, very light. I have very, very little swing trading exposure. My members have about 4 open swing trade positions right now on bullish put spreads, which is low for us. So that's how we're playing it. We're waiting for clarity. We're trying to generate some income while we wait for the market to get the information that it needs to either move lower or stage the next leg higher. That's all I've got for you today. If you like this content, please give it a thumbs up. Make sure to subscribe to the YouTube channel. Turn on your notifications. That way you'll always know when a new video has been posted. You'll never miss any of these trades. And I promise you, I'll include lots of education as well. Thanks so much. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.